Yeah, I mean, gosh, it's a difficult chair to be in right now, isn't it? Because on the one hand, worried about different elements overheating or inflation getting out of control, and then on the other hand, you don't want to be the central bank that repeats the mistake of the 30s, or indeed more recently by tightening too rapidly too soon, because that's not a good playbook. So I do subscribe, strongly to this view that it is better to wait a month or 2 months and just be clear on the data path before acting. I think that is a lesser evil than acting prematurely to tighten. I think that's the case. And I think Governor Bailey, in charge of the Bank of England, I think made a very, very difficult call at the last Bank of England meeting, when there was generally quite high expectations that the bank would move, and chose not to some quite considerable criticism. And yet I think probably on balance, people now feel that caution might well have been quite justified given what's happened more recently. It is a very, very difficult balancing act. I think it is easier to rein in inflation, hard though that may be, but it is still easier to do that than to dig an economy out of a depression once you're in it. So on the balance of the two, I think waiting a month is the prudent thing to do, because there's always the scope to tighten a little faster if you need to do it. So I think that's the balancing act that obviously is being weighed up very, very heavily. And so far, I think the judgment of the central banks has been correct to just hold for a little longer and do the evolution out of these special measures a little slower. You can always accelerate a little faster if truly the economy is off to the races and inflation is off to the races, but we're not in that state yet.